Hey everybody, this is Jose here. We are about to start in just a few seconds. Sound check, please. This is a sound check. Please go ahead and confirm in the chat box that you hear my voice. That would be great. So you know we are ready to start just in a few seconds. Very good. Wonderful. Thank you so much, Dirk. Good to get that confirmation. Very good. 3, 2, 1, and that's it. We just reached the top of the hour. So it's time to begin our session. Just going to maximize the introduction slide. And we will be ready to go. Hi, everybody. Today it's November 28, 2019. My name is Jose Blasco. I'm going to be your guide today. We're going to be looking into longer term trading. So this is the plan for today. When we do longer term sessions, what we normally do is to use options, and we do a little bit of a combination between directional trades and non-directional trades. We do a little bit of both, and that's the plan for today. Okay, we'll be looking at all those different opportunities. Before we start, we have a quick disclaimer, so we'll do it right now, which is disclaimer. The following videos, clips, demonstrations are for educational and instructional purposes only. Predictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through demonstration do not indicate in any way the results you may receive on using our products. And this takes care of the official introduction for the session. And therefore, here is our trade station. And we are ready to go. So I'm just looking at the chat box here. Yep, we have Dirk. How are you, Dirk? Lisa, Royce, everybody good? Pansy, how are you? Charles, Paul, Orlando as well. Very nice, everybody. Very, very nice. Perfect. Great to have you here. Special day today, isn't it? I mean, special week actually with the Thanksgiving. Yesterday we had the short-term session, and it was not so active, isn't it? So let's see what happens today with options, okay? But already when running the scanner, looking for non-directional opportunities, you can see the amount of results we've got. It's not so great, okay? So we may find opportunities quickly. We may not find opportunities that quickly. So we'll see what the market provides for us. But again, we are not going to bend the rules. We are not going to break the rules. If we end up the session with no opportunities, you know, we'll understand this is trading. If we end up the session with multiple opportunities, then we'll be happier. But we will simply adapt to whatever the market gives us, okay? So here we go. For the ones of you joining us for the first time, normally what we do in the longer term sessions is that we use a TradeStation scanner here on the left. And what we do is we normally first differentiate opportunities from, on the top, debit opportunities and therefore directional trades. And then in the bottom part, okay, we have the non-directional opportunities or credit trades, okay? Of course, when being non-directional, the plan is to make money basically on time passing. That is the main intention of those non-directional trades. And therefore, our preference is to go for the pure non-directional trades, marked as ND. But sometimes we'll have to dive into the neutral trades, neutral long, neutral short, if we were to find valid opportunities when we look at the non-directional. Okay, so let's be ready for that, because again, today, given the fact that Thanksgiving is around the corner, normally premiums drop intensively in front of a very slow week, and therefore non-directional trades may be difficult. From the point of view of getting a limited premium only. This also coincides with the fact that the earnings season is basically ending too, so many of the stocks that may have increased premium in their options because of earnings, many of those stocks are not in that position any longer. Okay, so what we'll do is that we'll look at the neutral trades as a backup plan. For now, I will not be looking at neutral trades, but we know they are there just in case. We'll begin the session looking at non-directional trades, and from there, we will for sure look at the directional long trades, okay, and also the directional short trades that we have here in the upper section right here inside the blue square box, okay? Very good. So Paul, Costco look good for Iron Condor or maybe directional. Very good. We have Costco actually here in the non-directional scanner, so certainly we're going to take a look at that. And also Barton, how can I get the screener you use? Very simple. You just shoot an email to us, which is reach@tradewithufos.com. I'll write it for you guys. So reach@tradewithufos.com. You send an email to us and we will reply to that email with a file that you can upload in TradeStation. It's actually technically a backup file, but it does not back up or restore the whole TradeStation. It's only the scanner portion of TradeStation. So that way you can import my scanner into your TradeStation. So just email us, okay? And we'll send you the steps and everything. Very good. So anyway, so let's begin. Okay, let's begin. By the way, the other thing I'm bringing into the screen is a browser where I'm looking at Yahoo Finance, more specifically finance.yahoo.com/calendar/earnings. Okay, and the reason why is because we have this box here where we're gonna be inputting the symbols of the stocks that we find in our scanner for non-directional purposes. Okay, and why is that? Well, because maybe those stocks have been identified as stocks with high-priced options, and the reason why they're high-priced is because maybe earnings is about to explode, and that would be a complete contradiction to what we are trying to do with a non-directional trade, where what we want to accomplish is precisely that market to remain quiet, and earnings normally create gaps and large movements. So we want to make sure earnings are not going to be anywhere happening anywhere during the life of the trade. Okay, so we're going to be looking at that. Okay, so we'll start with Costco. Click on Costco so the chart loads, and also we're going to be typing Costco on Yahoo Finance. So here is Costco, and we can see here that the earning dates for Costco is December 12th. Okay, December 12th. So if I get a calendar, okay, if I get a calendar here, so we can see that December 12th, okay, it's right there, okay, and therefore, given the current date, which is November 27, from November 27 until December 12th, we can certainly use either next Friday expiration, which is very unlikely to work given the little amount of time to expiration, but we can also try to see if we can do some sort of an Iron Condor with Costco using December 6th, which is an expiration date happening prior to the earning date that would add risk. So we want to be out of this trade before the 12th, therefore using 13 would not be allowed, but using the 6 is fine. So we're gonna go take a look at Costco from that angle. And the first thing that we're gonna do is load Costco 55-minute time frame. I am using, and I know that because of the color of the candles with the magenta and the light blue, I know I'm looking at pre and post market data, which is providing stats of 55. I want to check what happens if I switch to regular market hours, and that will provide stats of 48. In other words, the statistics provided using pre and post market data are more beneficial, are of a higher efficiency compared to using regular session data, and this varies from stock to stock. Okay, so knowing this, I'm just gonna load the chart, and what I need to find out, let me do some cleaning here because there were some trades done before, but those trades basically are over. The trade that we did on Costco was using November 15 expiration. Today is November 17, so that was done a few weeks back. So I'm just gonna delete everything so we start from zero. Okay, so what do we have here? We have UFOs below, but it doesn't look like we have UFOs above, okay? And that certainly is a problem. To do a non-directional trade, we need to have UFOs above and below. So I'm gonna move to the daily time frame just to see where we are at, okay? And yeah, unfortunately, it's looking like that stock, it's making all-time high. This is a monthly time from now. And if the stock is making all-time high, and the highest point of that stock happened in September, so what I want to make sure is that when I switch to the 55-minute time frame, I want to make sure that the beginning is September or before. And notice how if I go all the way to the left, we are pointing at August. In other words, this is the peak that took place in September around 305. And that's actually a bad news because there is no red UFO above price. Okay, that's the peak we were talking about, around 305. And I got no red UFO above current price, and therefore having only green UFOs below, I cannot plan on a non-directional trade on Costco. I could go ahead and potentially look at neutral trades, okay? Even though Costco is not showing up here in the list, okay? Maybe what I'll do is I'll rerun, because the neutral scanner is something I have not run today, so maybe I'll have them run in the background, okay? So we have them there so we can check later on. But from a pure non-directional point of view, meaning Iron Condor, we don't have the red UFOs that we need to allow us to define the upper part of a range. We only have the green UFOs below that are very handy to be there, but again, we are missing on the ones above, okay? So therefore, we're just gonna go for the next one, which would be MLNX. But again, we looked at this one the other day, not too many days ago, and liquidity was really disappointing. So then I will pass on this one, and therefore I will be then moving into Citigroup. So to check Citigroup, first thing I'm gonna do is to look at the earnings dates, which happens to be January 14. Okay, so this gives us a lot of options when it comes to using expiration dates, because the last one was October 15, which is a long time ago, and the next one is not going to happen until all the way next year. So, you know, we can use next Friday, the Friday after, the Friday after. So there are multiple choices, okay? So the key would be to see what is the chart setup that we have with our UFOs, and see when we sell those options if we get paid premium enough. This is a $75 stock. Of course, options are a derivative asset, where the higher the value of the asset, the higher the value of the options. And therefore, $75, I'm not saying is a low price, but at the same time, it's going to be easier to get the premium we need with Costco compared to Citigroup. Okay, so we're going to wait for that pending data and to have the whole chart properly loaded so we can assess the trade properly. In the meantime, let me see. I am also getting our notes, because when doing non-directional trades, remember there is a very important rule that we always follow, which is that when selling options, we are shooting for at least 35 cents per contract per share, at least. And sometimes it could be okay to drop all to 25, depending on what we get from the other side, if we are doing an Iron Condor, for example. But normally we are shooting for 35. So again, my concern when I see stocks that are, let's say, less than $100 or something like that, or stocks that are normally quite, let's call it stable, such as a large banking corporation in America, such as Citibank or Citigroup. Normally, those stocks, even though they may show us high value on high premium, really, when you start looking into the option chain, many times it's a little disappointing, and you would wish to have a little more premium built in those options. Okay, so we're gonna see that in a second. I'm not sure why it's taking so long to load, but okay. In the meantime, let me see if I can save a little bit of time. I'm looking at the daily time frame here. Oh yeah, I just type B instead of D. So daily time frame, yeah. So we do have a price action and potential on-field orders above, starting from February 18. Maybe we need to move all the way to January 18. Okay, so what I'm gonna do then is I want to disable AutoUFOs. I'm gonna get into the 55-minute time frame. It seems that it's still loading. Yeah, not sure why the download is happening so slow today. Yeah, the download is there. So let me kill the download. So I just hit delete on my keyboard. I'm just kind of forcing TradeStation to restart the download, just in case something got stuck in the download process, because really that's way too long. So I am recalling the download now. Interesting. So waiting for that. Okay, now it started. Yeah. So maybe in weeks such as Thanksgiving, sometimes brokerage companies, that's when they take advantage to certain maintenance in servers and things like that. So I'm not sure if that's the reason. Maybe out of all the servers available in TradeStation worldwide, maybe some of them are off or something like that. But certainly this is a speed of download which is way slower than normal. Okay. Yeah. So in any case, we're gonna have to wait to see PD go away before we can take a decision about it. Okay. Barton, very good. You are looking at IWM. You are also looking at Biogen. Good. Perfect. Yeah. ND is non-directional. You're correct, Paul. Yes, you're correct. There is more text here that I just missed. Let me take a look. Let me take a look so I missed nothing. So okay, by the way, the whole data just downloaded. So yes. Bojan, good to see you. Yeah, you are already in a trade. Okay, got it. Nice one. Yeah, good one. Okay, got it. Get to understanding what you guys are doing. So it's perfect, and I appreciate that you guys are sharing on the chat box. Okay, but anyway, let's continue our normal process. Okay, and we just got the whole set of data for Citibank. So what I'm going to do is activate AutoUFOs, see if we got UFOs above. We don't have them above, and the reason why is because if I go back to the beginning, so the data we have available here corresponds to, as you can see, June 19. And if you remember, we said we need to go all the way to January 18 to find a price action above current price, and therefore be able to assess if we got likelihood for unfilled orders or not. Okay, so it seems that I'm going to have to force a download on Citibank starting with a specific date, which is going to be January 2018. Okay, so I'm just going to do this, and PD will reappear because now TradeStation is downloading more data. Probably, by the way, I'm realizing that the reason why, I'm just realizing I got a problem with my camera, isn't it? So, okay, I'm just gonna kill it and that's it. So, I was saying that probably the reason why there was a problem here with the download is because I am in parallel running as well the scanners here that are still processing data in the background, which may imply some download. So maybe that was the reason, which I didn't think about. So anyway, Citibank just finished the full download. So I'm gonna activate AutoUFOs now. And the moment I activate AutoUFOs, I'm gonna be able to show the UFOs above, which I have one red UFO above, okay? The next one would be very, very far. That's 52%. Before I get to dig a little deeper, I'm gonna move into a regular session to see if that 52% gets increased. So 52% becomes 49.89, which is not as good as 52%. So really, I'm not so happy to see that, isn't it? But again, when doing non-directional trades, this is the only time where I often get more relaxed because we are not betting on a specific direction. We are not needing to be that precise with entries and exits because we are not making money from directional movements. We are making money from time passing. That's the main way on how we profit. Okay. Therefore, I do notice that we have two UFOs red color above price. Okay, and if I was to look below, we also have two UFOs below price here. Okay, but again, that would not be equal distance. So probably the way to end up doing a non-directional trade where price is more or less equal distance between the line above and the line below would be to use the UFOs the way I just did, okay? But as you have heard me say millions of times, okay, without even thinking about it, that's always how I start saying it, because we don't want to be biased about the decisions when it comes to strikes in the world of options, okay, or anything we do in trading. Biases would not help us. So what we're going to do is that I'm just going to use the power of stats, okay? I'm going to use OptionStation Pro and calculate a projection of price movement into the future to measure how far price is likely to move starting on current date all the way to the expiration date that we will select. And we'll make sure that probabilities suggest that price is not likely to reach 80.47 knowing that if probability suggests price is not likely to get there, that's going to be a good beginning. But most importantly, if price was to attempt to get there, then we would have red UFOs ready to defend ourselves and stop the price from going up, and more likely bringing the price down. Okay, so I am loading the option chain with Citicorp. That's it, I have it. So I got multiple expiration dates there. I will start with December 6th, which is what we normally do. Okay, we always go for the shorter expiration date, and this is the time where I said, without even thinking about it, just click anywhere, as long as you got December 6th, and click on Analyze Sell, and then add an iron condor. Because the moment you do that, TradeStation will place the iron condor in our Analysis tab, and we'll be able to add +1 standard deviation above, -1 standard deviation below, and therefore measure and quantify the range that is likely based on probabilities, which is between 73.5 and let's call it 78. So 73.5 and 78, it's certainly happening way before 80.5. So I would love to be able to use that expiration date and sell the 80.5 calls, but probably I'll get paid nothing for it. So 80, we got 81, and you can see pays only 2 cents, which means that given the size of the range, 9 days to expiration, it's too little time to receive and collect premium enough for the trade we are planning. If I was to use December 13, again, when looking at the 80.5, we are getting paid again 4 cents. No good, because remember our minimum is 35 by default. So let's look at December 20, and now when looking at the 80.5, notice it's getting more interesting, 0.16, but we are not there yet. So it's okay. Remember the expiration date, sorry, let me rephrase that. The earnings date for Citibank was January 14, so we can keep going 2 or 3 more expiration dates. I mean, the longer the time to expiration for an iron condor, the slower the speed of time decay, and therefore it's less interesting, but it could be okay. So now if I do December 27, now we get 26. Remember, our goal is to get at least 35, but there are certain cases where we'll take 25. In this case, we are being provided with 26. So I'm going to stop here with December 27 and assess the whole trade to see if the trade makes sense and we can execute in this manner. Okay, so I'm going to go ahead and change my date from December 6 to December 27. That would bring the upper part of the range based on stats to 79.89, which certainly it's below 80.47. Okay, so it's good. The purple line happens to be beyond what statistics suggest, and on top of that, I got 2 UFOs to defend myself, so that's good. And if you look at the bottom part, 71.69. So if we look at the green, 71.69, well, that's amazing. It's exactly where the line is. Okay, so it's looking okay. Okay, so if that was the case, that we sell the 80.5 above and we sell the 71.5 below, the question is how much I get for the 71.5 put. Okay, because our goal is to get 35. Okay, and so if you were to get 35 each side, so 35 times 2, that would be 70, right? Well, in this case, the 71.5 pays us 48, okay? And the one that we would sell as 80.5 is paying us 25. So 48 plus 25, is it 70? Yes, it is. It's 73. And this is the cases where, even though we are not getting the 35 we love to get, we will accept 25, being the minimum of the minimum, we will accept 25 because the put side is paying enough to offset for the difference between 35 to 25, which is our minimum. Okay. Well, this doesn't mean the trade will be valid, but this means that we are getting, to a point where it's getting close to what valid could be. Okay, and therefore we're gonna continue with our steps to see if this trade is validated or not. So we are now designing the construction of an iron condor. An iron condor is done by buying calls and selling calls above. And then we are selling puts and buying puts below. Okay, and I see a few more questions, comments on the chat box, so I'll take care of that as I progress a little further with this trade. Okay, so basically we got 80.5 above. Okay, we got 71.5 below. We talked about this already. So now what we want to do is buy something below 71.5. So what's available? That's the question. Below 71.5 we got 71 or 70.5. Okay, and above 80.5 we got 81 and then 82. Okay, 81 and then 82. Okay, so I'll try just to make it equal and produce an iron condor instead of a broken wing iron condor, which is how it will be technically known. I'm just gonna go for my first attempt to make this trade work would be to use $0.5 difference, and therefore I'm gonna go ahead and use the 81 call above, which is 0.5 above 80.5, and then I will use a 71 put below, which is 0.5 less than 71.5. Okay, so if I was to do that, so what would the outcome be? So I'm gonna go back to my analysis tab. We said 71 and 71.5 using December 27. So I'm just adjusting all of this, and then on the upper part we're gonna be doing 81 and 80.5 on the call side. Okay, now if you were to do that, what do we get? So what we get is $0.5 strike price increment. So the most we would lose in this trade is $0.5. And for a risk of $0.5, our rule says that what we will want to acquire as a premium is 15% of the risk, which is, as I just said, 0.5. So if 0.5 is the risk we are assuming in this trade, 15% of 0.5 is 7.8, and this trade is paying 8 cents. In other words, doing it this way, the iron condor is valid. Having said that, I am really not excited, because for you to have a profit, which is, let's call it decent, you will need to sell many contracts, because the most you will make in this trade is $8 per contract. And if you wanted to make, let's say, 100, so you're gonna have to be selling, like 15 contracts, and 15 contracts times 4 options, okay, that's gonna be 60 contracts total, and you're gonna have to pay commissions for it. Sure is that TradeStation, for example, gives you commission models where you pay crazy low. So the trade may be okay, but certainly probably this trade would be valid for more than for really you making money with it, for experimental purposes. If you are a new trader learning how to trade options and you want to take a trade with very limited risk, which is $50, okay? But this trade got $50 of risk, right? Because the distance between strikes is 0.5, so that's $50 of risk. And then you collect 8, so 50 minus 8, $42. That's the most you can lose. So if you were to be a brand new trader trading options and you want to get to experience an iron condor, well, this could be a way to do an iron condor with very, very low risk. But definitely from a point of view of profitability, you will need to just use so many contracts, which it becomes quite crazy, okay? So this puts me in a position where I'm gonna have to go for the 82. And if I go for the 82, from 80.5 to 82, we got $1.50, which means that from 71.5 to $1.50 less, that would bring me to 70. So I'm gonna have to do 70, 71.5 and 80.5, 82 to make it equal distance, okay? And when I do that, let's see what happens, okay? So I'm gonna go for 82 on the upper side, and I'm gonna go for 70 on the bottom side, okay? Now, if I do that, what do we have? So let's see if this is interesting to us or maybe not. So we got $1.5 of risk, okay, that's the risk. So $1.5 is the risk. Earlier it was 0.5, now it's 1.5. And we are looking for a minimum 15% of premium, right? Which is at least 20 to 5, okay? So in this case, we are getting $28 of premium, okay? I mean, think about it. Earlier, to get $28 of premium, knowing that every time you would do an iron condor, you would get paid 8, you would have to do 3.5, right? 3.5 iron condors, where each condor would have a risk of 42. That would be $147 of risk, right? But now you do one, and your risk is 150 minus 28, 150 minus 28, and that is 122, where 122 is less risk compared to 147. So instead of doing 3 times the other condor, I rather do 1 time this condor. It carries less risk, and then you get more premium, meaning that if you are shooting for, let's say, $100 of profit, then you can do this trade, let's say 3 times, okay? And you are getting close to that $100 total premium collected. In any case, of course, I'm not saying that $100 is an amazing trade. So yeah, so this trade very clearly said it's not amazing, okay? But again, it's probably the consequence of using a stock which is around $75 instead of using a stock which is, let's call it $200, okay? That's the difference. So anyway, from a technical point of view, the trade is valid, okay? So out of having it in the account, having it running, being able to review it in the future if needed, and having you practice, especially if you are new to trading and you never traded an iron condor before and you want to experience with it. So this trade is valid to be executed either with paper money or real money. But I would look at this trade as a valid trade to practice, to learn from it, more than a trade to really make money with, again, given the size of premium to be collected. Okay, so I'm just going to execute the trade. I'm just going to click trade. Okay. I'm going to make it market, which you should not do make it market. Okay, the natural price is 23, the midpoint is 29. So I would recommend to go for 29 and be patient until you get filled. And if you don't get filled, it's okay. Okay, and actually I'm going to do that. I'm just going to make it limit 29. Okay, I'm using a day duration. So if I don't get filled, my order will be automatically removed from the system. Okay, so I'm just going to click yes and validate the trade 1, 2, 3. That's it. My iron condor order is in. So I have an iron condor here waiting to get filled. Okay. And that's it. Okay. So the trade is in. Okay. Very good. Perfect. Good. So next one. Let me take a look at the chat box in case there is any comment, question. Very good. Perfect. Yes, Paul. So we'll finish first the pure non-directional trades, and then we'll look at the directionals, if that's okay. So now, what else do we have here? GIS and KRE. Yeah. Well, KRE is actually an ETF, so I should not click on the one. GIS. That would be a valid company to do an iron condor in. We do have UFOs above and below. Okay, let's take a look at the earnings date for GIS, which is December 18. Okay, so December 18 allows us to use December 6, okay, but also December 13. Right? So we can use December 6 and also December 13. So we can use those two. Okay. So let me see if we're going to have enough premium here. And certainly 53.98 is a good probability for a stock. If we were to look at pre-post market, that would become 48%, which is less. So for that particular stock, regular session is key. And we do have multiple UFOs above and also below. And we may be into something here. So without thinking about it, okay, it's always how I say it when we get into the option chain. Without even thinking about it, we're gonna go ahead and look at the option chain. Oh, okay, bad news. We are done with this trade because there are no weekly expiration dates. We only have monthlies, and the monthly expiration date happens to be December 20, where we said earnings are on the 18th. Okay, so we just cannot do it. There is no opportunity with GIS. Okay, good. Okay, so let's switch, and we are now done with the opportunities that could have been non-directional, and we are now going to start looking into directional trades to the long side and also directional trades to the downside. Okay, so we'll begin with the long side, the long ones, and I'll be a little picky as well when looking at stocks and taking into consideration their price and their liquidity. So I'll start with Netflix. So let's see what we have with Netflix. Okay, So the 55-minute time frame is loading. But you know what? We are done with Netflix. Why? Because we got 9 candles into a climate. The stats suggest 6. Half of 6 is 3. So 6 and 3 is 9. And we are very far from the average. So it's not likely we're going to come here. If you were to get filled today, it's fine. But, you know, expecting more movement, it's a little hopeful. Typically, what would happen based on stats is, you know, you had this movement, whatever, and then you would have an important retracement before it keeps going. And that's what the statistics are suggesting. So instead of planning on a long trade on Netflix, we are going to pass at least today. What else interesting we have here? Yeah, so we're going to look at CVS. Barton, I see your comment about volatility rising as earnings approach. Certainly, that is absolutely correct. I'm not sure what was that connected with. I don't know what I said that had you write that particular comment. So if you could rephrase it or give me a little more clarity there, I'd be able to comment on that. Okay, because the expiration date that will increase the most with earnings is the one that is happening at or after earnings, not the one that is prior to earnings, and therefore you would experience. Okay, got it. Yeah, so that's why we are not going to use the trade with GIS, Barton, because the earning date happens to be after earnings. If we were to use that expiration date, we would have the problem that you just mentioned about volatility rising into earnings, but on top of that, you would have actually earnings happening prior to the expiration date, which may create a massive gap and get that stock trending heavily in a direction, which is the last thing you want when you do non-directional trades. Okay, so we're not going to do that. Okay, that's why we passed on the trade. Okay, so good comment there. Anyway, CVS, it's loading here. Okay, again, not sure why the downloads today are looking to be so slow. In any case, doesn't matter really. Look at the amazing climate that CVS had. Okay, so we got 23 candles in a climate that was supposed to last for 5. Talk about an extended move. You know, that stock is certainly, based on probability, is likely going to do some sort of a correction if it was going to continue to the upside, and therefore entering now would be just a little too soon. Okay, too soon, or another way to look at it, too late. So let's keep looking at those different opportunities. I'm looking at those opportunities and also thinking of liquidity conditions. So let's look at SQ. So what do we have with SQ? Yeah, so we have 9 candles into 9. So yeah, pretty extended move as well. Even though we normally add 50% extras in it. So if you take 8.15, run it up to 9, and then you take half of it, that's 4.5. So it allows you to get into trades until you get to candle number 13 or so. So candle 9 is okay. Unfortunately, we are just a little far from the average. So I'd like to look for other opportunities which hopefully give us an easier execution. Okay. So looking at Skyworks. And this one seems better to me because we are looking at 3 candles out of 6. So we are right at the beginning of the climate before a huge expansion happens. Like this could be the case. I'm not saying that's going to be the case, but potentially it could. So we are at that stage based on statistics. And knowing that this is the case, okay, now we're going to be looking into the pending data. So we can evaluate if there is any green UFO around the value of 98.66, okay, which at this moment in time it's not really looking like, because that would be somewhere here, okay, and there is no UFO here. We have UFOs at 99, and we have UFOs at 97, but not at 98 something, okay. So now, of course, once I finish loading SWKS, I will also look not only at the regular session data, but also pre-post market, and we may find a UFO there in pre-post market. So then would be able then to plan on a trade. Since this is loading, what I'm gonna do is just go through the list, the remaining stocks. So we're looking at TD Ameritrade. That stock has been moving crazy since the announcement that this company may be purchased by another important broker in the US, Charles Schwab, isn't it? So that stock has been moving very, very heavily. Climate, unfortunately, it's too late. We got 9 out of 5, okay? So half of 5 is 2.5, so that's 7.5. We already traveled for 9. So what's more likely to happen to that stock is to have a strong correction before it keeps going, if that was the case. We don't want to be there when that happens. Next one is Chipotle Mexican Group. So what do we have here? So we have a climate of 8 out of 9, so still time to get in. Pretty far from the average though. So again, for now, my pick would be SWKS, which I'm gonna come back to that one in a minute. We are looking now at Carvana. Paul, in Keles, based on the scanner that we're running, where we identify a potential setup for SWKS, that scanner is also picking that stock as a valid stock for debit trades, meaning that the level of premium built in those options is not that high, and therefore doing a put spread, as you are suggesting, would be probably a trade that would collect too little premium, given the risk. And therefore, the scanner does not recommend doing that, even though it could make sense from a directional point of view. From a premium point of view, the scanner is not looking at it this way, okay? Yeah, so I just gave you the answer to your question. Yeah, very good. So anyway, so CVNA, okay, 5 out of 8. And by the way, we're gonna find this situation in many of the stocks that are in the long scanner list, because when you look at the S&P 500 itself, okay, when you look at the S&P 500 itself, the move that market has been experiencing. We got 34 candles into the climate. This is really impressive stuff, isn't it? So therefore, you should expect many stocks to be extended, given the fact that the broad market itself is extended, right? So we are looking for that peaky opportunity where some stock already extended, already retraced, and is ready to push again, right? And we want to be on board of that one, okay? So you see another one, 12 out of 5, too extended, too late to get in. SE. So what do we have with SE? 24 candles out of 9, so too late. When we move later into the short setups, you will see how it's not the case, or it should not be the case. But with the long setups, most of the stocks are extended. Snap, well, to be honest, I'm just going to skip on Snap because it's a $15 stock, so it's too cheap. And SPLK, that would be the last one we're gonna load before we go back to SWKS and complete our plan, if there was to be a plan to go long that stock. So this one, it's 7 out of 6. So from a timing point of view, it's still fine, but we are far away from an average price, and therefore there will be a lot of waiting time before that happens. So again, for the long side, the only stock at the moment where we may have a plan, it's going to be SWKS. So let's take a look. When loading Skyworks in as 55-minute time frame using regular session data, we end up with stats of 47%, and that is not satisfactory. So we're going to look at pre-post market. We need to be above 50. If not, no trade. So let's see. Pending data for SWKS with pre-post market. It's pre and post market because I got my TradeStation set up with those magenta color as well as blue. So when you see colors instead of gray candles, it's pre-post market. So I'm just waiting for this to fully download. And the moment it downloads, we will then go ahead. Okay, let me cancel everything else so we can do this quickly. The moment it downloads, we will know more about the probabilities. I have to say it's not looking too good. 43%. That is lower than 50. So we are gonna pass. Okay, so no opportunities to go long. And I mean, you could certainly go long based on other criteria and so on, but by following the method that we use in the sessions, it's just too late. We had many trades that we found in prior sessions that are paying nicely, as we know. Okay, Lulu is doing very well. MU, Oracle, so we had some trades that we entered early on, and they are paying well, and other trades that were closed already for profit. So nice job and well done for that. But the fact is that the S&P has stretched a lot. And in order to enter with some level of probability stacked in our favor, we need a healthy retracement for a next impulse to take place. And, keep betting on that impulse to last forever, which could be the case, but from a probability point of view, it's not likely to be that way. Is that making sense? So we are going to have to be disciplined here and not to fall into any trap of, seeing the market moving and, you want to add more, but it will not be prudent, at least at this time. Okay, so we're going to move into the short opportunities to make money to the downside. We have BP. Okay, BP. So when looking at BP, we'll start with the climate. We got 7 candles out of, let's call it 8. So certainly it's still time, but for us to be able to get short, we will need to wait for BP to come back where the average is. And from there, we'll take the trade with the UFOs and write it down. It seems that we are 1.75, 1.71 ATR away from an ideal entry. In other words, it should take at least 1.7 days to get there. So planning your trade today is too soon. What about BUD? With BUD, let's see what we have. Okay, with BUD, we have a different scenario here. 6 candles out of 8. So we are still in a good time for us to take a trade. And certainly the average happens to be less than 1 ATR away, which that is, let's call it, it's not like so close, but it's way closer. So 78.96, it's the value we're looking for. With pre-post market, the stats returns are 37%. That is very low, signifying the fact that the large market players tend to cancel their orders on that stock if they don't get filled quickly. So we're going to move then to regular session data, and still, even with regular session data, we get to see statistics of less than 50%, which totally tells you clearly that when those larger market players place their order in, they just cancel them if they don't get filled on the whole amount they wanted. So we are not going to trade a stock like that because really it's not giving us odds enough. So looking at DuPont, with DuPont, what we have is a situation which is too stretched to the downside. 10 candles out of what would be 5.34, we run it up to 6. So half of 6 is 3, 6 and 3 is 9, 10 surpasses 9. So too late, that stock has been falling too much. We need a retracement. So we are left with the last one, which is WB. Okay, what a day. What a day. And by the way, these days are to be expected in weeks such as Thanksgiving. Everything becomes slower, and I'm not sure who triggers that switch somewhere in the market, but it's like every opportunity kind of disappears, given the fact that less market participants are in the market. Okay, somehow it makes sense. So WB, Weibo Corporation. So we are waiting for all the data to be loaded so we can measure probabilities and know if this trade makes sense or not from that point of view. From a climate point of view, we got 9 candles, 9 out of 6. It's borderline, okay, but it's okay because if you take 6, right, and you add 50% of it, that would be 3. 6 and 3 is 9, and this is today's candle, okay? So today is the last day for us to have permission based on the methodology to enter a trade, okay? And we need to find a UFO located around 43.6, okay? Which we happen to have one, okay? So all of this is looking good. Now, what is not looking good is that figure. 42.78 is too weak. So we're gonna check if pre-post market gives us more strength, and if it's 50% or more and we have a UFO, we'll take the trade. Unfortunately, it's not. It's 40.61. So yeah, we got no in every single scenario. None of the scenarios we observed today is meeting our rules, okay? Which is obviously not the best, especially when we get together for 1 hour. What I love is to be able to come up with trades that you guys can execute, enjoy, use them to grow, but also use them to practice and, find different scenarios where today is not the case. I mean, yes, we did have a trade with, what was it? I forgot, with Citigroup, an Aaron Condor, but it was not really a trade that would provide hefty levels of premium. It was actually quite shy, okay? So anyway, so we're gonna move now into the world of neutral trading for the remaining 10 minutes of the session. And neutral trading means that we're gonna basically look at neutral longs and neutral shorts, which is kind of like having the same mindset of when we do an Aaron Condor, but instead of doing a full Aaron Condor, we're gonna do half. We're gonna do only the buy side or only the sell side, okay? So let's begin with the buy side, and which is the buy side in this case is gonna be using puts, okay? And we're gonna do put spreads, and I'm gonna be looking at different stocks, again, filtering those stocks based on liquidity, and certainly FedEx could be a good candidate as long as everything else is good. FedEx could be a very good candidate for this type of trades. Okay, so what do we have? Well, from a climate point of view, of course, the scanner is doing its job. We got 3 candles out of 6. So, based on only because of climate, this thing is more likely to keep going higher than going lower. And on top of that, it does look like we got multiple UFOs ready to help the trade to work well. So we're gonna wait for the pending data, okay? We need to have a decent probability. Remember, this is gonna be a neutral trade. So then it means that we are not shooting for 50%, even though it's so much better when the stats are 50%, and actually they are 51%, so that's great, okay? But if it was to be, you've seen me use up to 48% in cases of neutral or non-directional trades, isn't it? So we'll be okay to go that low, but not below 48, okay? So what's happening with FedEx? Well, with FedEx, we got 51% using regular session. When moving to pre and post market, 51% becomes 45, which is less advantageous. So we're gonna go back to regular session, and from there, begin planning on our FedEx trade. So as always, without even thinking about it, no biases, let probability tell us how far is far, okay? We're gonna be looking at FedEx, okay? And to pick the right expiration date as well, we also need to look at the earnings dates on FedEx to make sure that we don't get in trouble in that sense. So earning dates are December 18, meaning that we could use any expiration date as long as we don't surpass December 18. Okay? That's the plan. So let's begin with December 6. Okay? And we will go from there. So I'm gonna look at December 6 without even thinking about it. Remember, of course, we need to pick the put side because it's a neutral long, so we need to look at the put side. We're gonna right click to analyze and sell a vertical. And it doesn't matter where I click, which strikes. What I care about is to have the right expiration date. And in this case, I don't care about the upside. Okay, I only care about the downside because it's a neutral long. So I want to look at what is my -1 standard deviation, which happens to be 155.46. So keeping that number in mind, 155.46, I want to look at UFOs that are located at or below 145. So 145 is somewhere here, okay? And notice that the next UFO I got is located right there at 141 something. So the question is, if I sell the 141 something put, do I get paid generously? And with December 6, absolutely not. Absolutely not. I get paid way too little. So what if I use December 13? The one, let me see that. 155. Wait a minute. I just made a mistake here, isn't it? Yeah, I was looking at the chart and it's like, why so far? Okay, let's start again, guys. I just made a mistake. I guess I was looking at I don't know what I was looking at. So the -1 standard deviation is 155.5, okay? 155.5. So again, if I put my line where 155.5 is, Okay, it's more or less there, meaning that if I was to sell options, okay, I would be selling options around that price level, which is 154.5. So keeping that number in mind, let me go back to December 6th, okay? And I'm going to be looking at what we just said. Don't want to make a mistake. 154.5. There is no 154.5. Therefore, it would be 155, okay? And the 155 is paying 48, which, yes, it is correct. 48 is more than 35, okay? So it is looking okay at this moment in time. I would prefer to have the 154.5, but it does not exist. Therefore, the other money strike is 155. So I'll go for that one, which is the nearest one. Okay, so I would sell the 155. Sell the 155. Okay, and the one below the 155 is 152.5. Correct? So we have 155 and below 152.5. So we're gonna pick those two, okay? And this trade will have me receive 48 and pay 23, okay? And that will be the total credit collected if I was to do this trade, okay? So you can see it here. The total credit collected would be 26, okay? 26, and the difference between strikes, that would be my risk. Okay, and by the way, we know the rules because we covered that earlier, right? So if the risk is 2.5, okay, if the risk is 2.5, and our goal is to collect at least 15% of that, okay, so that would be 37.5 cents, and here we got a problem because we are getting paid 26 cents, which is less than 37.5. So this trade is not valid, okay? This trade is not valid, and therefore we're gonna have to go ahead and change the expiration date and see if we can make it work or not, okay? Dirk, oh, you know what? You're right. You're right. I changed the dates earlier and then I forgot to go back to the normal setting, isn't it? Yeah, so 48.17, okay, certainly is a worse value, but it's above 48, so it's fine, okay? Yeah, a good catch, Dirk. Thank you very much for that one. Yeah, absolutely. So anyway, so let's continue. So since December 6 doesn't work, the question is, what if we do December 13? Well, that probably brings premium enough, but at the same time, it will also widen and push down the line that we had earlier located at 155.5 needs to now be located at 152.75. So let's take a look at where is that on the chart. 152.75 is here. Okay, so for us to do this trade, we'd need to be looking at 151.86, which I guess is going to be 152.5. Okay, so let's take a look at what's available using the next expiration date, which is December 13. And yes, it's 152.5. So let's go ahead and do this. 152.5 and 150, which are the two strikes that are next to each other. So I'm going to move this to 150 and take the 152.5. And if we were to do that, so now the premium that we receive as a difference is 29, where the risk of the trade is still $2.5, okay? And again, we are looking for 37.5 minimum, but we are getting paid just a little more instead of 26.29, but it's still not paying us the way we need to collect the 15% that we are shooting for based on our rules. And you know, it could be okay to have different rules, but those are the rules that we have, and therefore the trade would not be validated at this moment in time. So what was the earning dates again? It was December 18. So by looking at the option chain, unfortunately, we will not be able to use the next one because the next one will be 20, being 20 after December 18, which is the earning date. So that would be a trade where we need to pass, okay? And yeah, so that's what it is. We're gonna pass. What else is available? Let's see if we can look at another chart and hopefully have a trade. So what do we have available here? Let me see. let me see, DHR, that's interesting. So DHR is a stock I have never traded before. So my concern here is how is liquidity going to be with DHR? So let me take a look first, because if liquidity is not good, then I will not spend time looking at it. Yeah, so I would anticipate it's not too good given the fact that we don't have weeklies, okay? So yeah, so no DHR. Yeah, and those stocks, $50. Yeah, nothing amazing. So I'm going to look into the call side. ULTA. That may work, is a high price point stock. GLD is an ETF, so we're gonna stop. We're gonna pass on that, and then CPD is too low price. Okay, so if we were to do that stock, okay, what do we have here? Okay, well, it seems that we are having a little bit of a potentially changing climate, isn't it? So that's a little concerning. But again, the scanner is doing its job and reported that one, so we're gonna respect that because this is not a directional trade. So we don't need. I was just looking at this out of curiosity, but we don't need to respect the climate rules here. Is that making sense? So we have an environment which is prone to be valid for non-directional trades to the downside, neutral short, and therefore we have multiple UFOs. So we just need to make sure that this value is going to be at least 48%. At this moment in time, it's 44%. So if I switch to pre and post market, 44 becomes 46, which is better, but it's not 48. And therefore, we cannot execute a trade on that one. Okay, so my friends, we just reached the top of the hour, and today, together with yesterday, are those type of days where I wish we had a little bit more activity out there. But obviously, as traders, we need to be adaptable to the market conditions and what the market gives us. Okay, this is like actually is exactly like being a fisherman, where you drive your boat in the middle of the ocean, you throw your net, and you do it based on your plan. And if you catch fish, congratulations. And if you don't catch no fish, or if in the middle of the journey going to fish, you are told that the weather is about to get very bad and you have to turn and go back home, then you just do that for the sake of safety. Okay, so trading is exactly the same, and certainly trading in weeks such as Thanksgiving often gives us these type of situations. But anyway, hopefully today's session was still productive and useful to you guys from the point of view of reviewing the process, reviewing the methods. We looked into directional, non-directional, and neutral trades today. So from that sense, I would say it was quite rich. From activity point of view, the only trade we were given was the trade on Citigroup, an Iron Condor on Citigroup, that I suggested to use as a practice trade more than a real trade to really help your account grow. Okay, but anyway, that was today, everybody. A pleasure to have been your guide in today's session. Pleasure to have you. Pleasure to see a few new names as well. Welcome to the sessions, guys, and see you next week. And certainly, if you are in the US, have a very special day tomorrow. Happy Thanksgiving. Enjoy such a special occasion with family, friends, and do very good things. Okay, so happy Thanksgiving, everybody. See you soon. Bye-bye.